the markets may be taking a big hit today, but our next guest says a 20-year bull market is still alive. Joining us now is Brian Belski, BMO Chief Investment Strategist. Brian, tell me your reasoning for that. Do you think that just today's move is a one-off and we're going to continue to ratchet up higher?
Well, thanks for having us, Heidi. Yeah, I would say that. We've been a believer in this 20-year bull market. We first came out with a call in 2009 that U.S. stocks were entering a bull market, and then refined it in 2010 and said a 20-year bull market. Clearly, the first part of that, nobody believed. And then we had a nice rally, of course, as you know. And then with respect to what's happened in COVID, everybody got scared out of the market and didn't believe in equities again and became way, way too bearish. And now we've had obviously an unbelievable, unprecedented move after an unprecedented move to the downside. So one day doesn't make a trend. Stocks are rarely linear for long. We've had 9 trading days in the month of June. 7 of them were really good. And so if we're going to anoint the June swoon after one day or a day and a half, I think that's probably too premature. And investors should not be trying to invest in the stock market based on days or weeks, that's for sure.
So then, Brian, I'm trying to make sense of today's sell-off. Do you think this is mostly because of the commentary that we got yesterday from the Fed? Do you think that the market was just overbought here? I'm trying to understand why we're seeing this sharp of a sell-off.
Well, it's a great question. So Mr. Powell did fan kind of the flames with respect to the market, but he talked more about uncertainty. And I think most investors take a look at that or consider that word uncertainty to be negative. I think he actually talked about it with respect to the uncertainty of the employment report last Friday. That's kind of number one. Number two, you have had an unbelievable shift in sectors between May 15th and 2 days ago, meaning you had a huge move in value, huge move in industrials, financials, and energy to the tune of some sectors up more than 30% from where they were troughing out in mid-May. And then number three, there's this constant concern and rhetoric with respect to the quote unquote second wave, that there is no absolute proof that one's coming. But on days like this, when you kind of compound the negative news, Heidi, everybody starts to go back to the default negative COVID news, which again, we think is way too early. So, the market needed a breather, and it's getting its breather in a very violent way today. But, what goes up must come down.
Yes, it does, Brian. I'm just trying to understand. Also, you have a target on the S&P 500 of 3,400. Now, is that a 2020 year-end target? Is that a 12-month target? And what's going to take us to that level that you're calling out, which is 3,400?
Well, it's a great question. Again, on March 23rd, we suspended our year-end target and transitioned it to a next 12-month target, especially looking at the relationship with respect to last 12-month earnings and next 12-month earnings, and how stocks do when we hit this quote-unquote triple whammy: a recession in the economy, an earnings recession, and a bear market in prices. And we look back in history, and we still said that, from a 12-month basis, meaning by the end of Q1 of 2021, 3,400. What gets us there? I mean, a couple of days ago, 3,400 looked like it was going to be like a walk in the park, and then you have obviously this nice correction here today. But what's going to get us there, quite frankly, are earnings. We think earnings are going to be rebounding in the second half of the year. And oh, by the way, we still think that U.S. stocks are the best place to be with respect to equities in the world. And we have foreign investors coming back to the United States. And from a longer term perspective, we still have many great themes in the U.S., whether or not it's the mobile society, whether or not it's onshoring, and whether or not it's CapEx coming. And those could be themes heading into 2021 and 2022.
And Brian, finally, after we hit that low on March 23rd and we started rallying from there, it was large cap tech that really took the market higher. But then most recently, we started to see value sectors participate in the rally as well. In terms of putting money to work right now, where investors put their cash?
I think both areas, quite frankly, in a diversified portfolio, you don't have to be either or. For instance, there were days last week when the market was flat, and the big tech stocks were up. And when the market has really been catching fire here as of late on the upside, it's been the value stocks, because principally the big financial stocks have been so under-owned. So the contribution to performance in the S&P 500 has really come from those banks, the big banks in particular. So I think as a core portfolio of U.S. stocks, you want to have exposures to both. So we still see very, very strong secular fundamental trends in the overweight sectors that we're overweight, especially with respect to communication services and technology.
All right, Brian Belski, BMO Capital Markets Chief Investment Strategist. Thank you so much for joining us. today.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.